Well, hello friends. Hey, it's Jamie here with Reece Homes. We hope you are enjoying the first days of June. It's June 1st, and I wanted to give you a market update. First and foremost, we'll talk about debt ceiling, then we'll talk about mortgage rates. We're going to talk about market activity, the latest market activity, and then we're going to talk about the upcoming client events that we have here over the next few weeks. So let's jump right in. So debt ceiling, happy to report that while the debt ceiling has had a growing negative effect on pretty much all markets, including the real estate market, over the last 3 weeks. In the last couple of days, we've cleared the most difficult hurdle. The House of Representatives came to an agreement and passed a bill to extend the debt ceiling. So we're very grateful for that. And we expect, much like happened in 2011 when we had the last brinksmanship related to the debt ceiling, that we're going to see nerves calming in the coming weeks, and we're going to return back to a more normalized market. Now, let's talk about what that looks like. So when we look at mortgage rates, this is one of the things that I track, which is the trends of mortgage-backed securities. And what you really need to know here is that actually, when mortgage-backed securities trade down, mortgage interest rates go up. So if we were to look at over the last month or two, mortgage rates were right around 6.25%, 6.5%, depending on the day and the week and everything that was going on in between there. But what we saw is around 2 weeks ago, 3 weeks ago, we started seeing major concerns affecting the mortgage and broader markets, stock markets and things like that, with regard to the brinksmanship that was going on with the debt ceiling. That drove mortgage-backed securities down based upon the lack of confidence in the market, and increased mortgage rates to 7.25% at their highest here most recently. But in the last couple of days, as you've likely heard in the news, we've gotten to an agreement on the debt ceiling, and you can see the immediate effect that's had in trying to normalize mortgage rates as there's greater confidence both in the short-term and the long-term market. And we're already seeing rates down at 6.75, and we expect that they'll return back to these more normalized ranges, and even potentially going a little bit lower than 6.25%, 6.5% over the coming weeks. Now, what are the things that are going to continue to influence mortgage rates? Well, the first one is inflation, and I'm happy to report here that we're continuing to see signals that inflation is going to continue to subside overall. And inflation is an influence as well in the Fed rates. And we've had a couple of Fed governors here in the last couple of days mention that they're looking at taking a pause on raising the Fed rate here in their next meetings. Now, employment is also another big factor in influencing inflation and mortgage rates by proxy. And we've seen employment having mixed results. The first one is actual new jobs, or people taking new jobs. That's been up, and that can signal inflation and wage through wage growth. That said, we've also seen the first uptick in unemployment, a small uptick in unemployment, only about 2,000 more new filings for unemployment here recently. But we're starting to see that labor market balance out, which should help us control inflation. And then, of course, the most important thing is economic activity. That's what drives inflation or not. And we are seeing that, again, normalize a bit more. So we expect mortgage rates, the influences here, to be calming, especially with the resolution of the debt ceiling. Now, what has that done to our market? Well, what I can tell you is inventory is down 15% month over month. So April to May, inventory was down 15%. But what I found interesting is that's largely because pending sales month over month are up 20%. So there is market demand out there, whereas properties available for sale are only up 5%, right? So you're seeing more people going out there and reaching out and getting those homes into contract and fewer sellers coming to market. We expect that for sale side of things to increase significantly in the next few months as people gain more confidence in the broader economy now that the debt ceiling is resolved. Now, it's important to note inventory is up about 37% from last year. Now, these are still very, very low levels. You're talking about inventory right now is about a month and a half. That's incredibly low, and last year was about 0.8 of a month. Now, days on market down 12% month over month, April to May, and that was up 175%. But let's put some real numbers on that. In April, we had 25 days on market on average. In May, we had an average of 22 days on market, and last year in May, we had just 8 days on market. That was really we were starting to get to the peaks of the market of last year. So, days on market right now, we're actually doing pretty well. And then in terms of prices, we're down 8.9% versus last year, but we're up 4.1% versus last month. So, that what we're starting to see is monthly increases in median home price, though we're still down from the peaks that we saw last year. And we expect these down numbers to continue on through about August, September of this year, and then we'll likely see increases year over year in the 1 to 3% range for the following 6 months. All right, so that is your market update. Let's talk about some upcoming events that we have. Coming this Saturday, we've got our summer movie barbecue. This is Saturday, June 3rd, 11 a.m. to 3 p.m. It's Marina Beach Park is our location. We're going to have food and drinks and giving out a pair of movie tickets to each client that shows up and friend of the business that show up. And you can RSVP, and it's very important that you do so we can have enough food and drinks and such. RSVP at movie.connectingyouhome.com. And then we're also having our ongoing series of Sips and Tips events. The next one is coming up on Thursday, June 22nd, and you can RSVP to that at sips.connectingyouhome.com. We'll be talking about the latest market activity, and that should be a dynamic one so we can see what's been happening after this debt ceiling resolution, as well as the best strategies in today's market, both as for buyers and for sellers. Thanks for watching. Look forward to seeing you out at our event on Saturday, and hope you enjoy all that the summer has to offer. Take care.